up, traders? What up, investors? Ken here from Dyslexic Investor, and we're going to be looking at NNDM. Of course, Nano Dimensions. This has been a stock that has got a lot of glory late last year. Coming into this year, it's been a very bumpy makeshift ride to the downside. Maybe, hopefully, potentially turning the corner here. I think it's a fantastic company, and we're just going to have a lot of fun with it. So let's go ahead and just jump into the show. All right, so we're going to be looking at NNDM. We're going to be looking at their financials at first. So we're going to be looking at revenue. Of course, the president and CEO has said multiple times that they have raised quite a bit of equity, a lot of cash. They did a lot of stock offerings all the way up. That I think was in the long run, it's going to be a very great strategy for them, allowing them to. They literally have no debt, and they also have a lot of cash in hand right now. You can kind of see here, just here from June of 2018, all the way into, sadly, the March timeframe of 2020, you see a pretty steep decline in revenue year-over-year growth. Of course, that was due to the pandemic. A lot of laboratories and things were shut down. So again, if you're not familiar with NNDM, so NNDM is a company that does 3D printing dimensions of chips. So they have a special proprietary machine that's able to print the silicone and the 3D printing process all in one bit. So it's able to be processing these chips very fast and easily, not fast like within instances, but it's a process that they are manufacturing that is basically this size of a refrigerator. You're able to put the whatever kind of, not like the CAV file, and able to experiment on basically creating little processors and other various chips and semiconductors for testing and prototyping very easily to test out things. Pretty fantastic. So this is a picture on how it looks overall. Of course, this is the Dragonfly model on that particular level there. Of course, you know and love ARC is definitely involved in this. We're going to be talking about that here in a second as well. So again, going into the financials here, somewhat of a decline due to the fact of, again, not many factories and laboratories have been open, and they have not been able to sell. So the company, what was the next thing to do is to raise capital to save the company, because again, we didn't know how long this is going to be prolonged out. As you can see here, there's been a pretty steep decline in revenue growth. But on the same side, you see enterprise, or the market cap is around $2 billion. And currently on cash and short-term investments, they have about 2.1 billion. So they have more than equivalent than their market cap in cash in hand, in the sense of short-term cash. Basically, there's can be like short-term notes or something like that they have in hand. Of course, you see that has grown substantially due to the fact from September 2020 to December 2020 on raising a lot of that selling of stock within the company all the way up once we look in the chart. So what are the news headlines saying? A lot of people are saying, hey, it's gone up too fast, too far. It's a good long-term opportunity, but poor valuations. So this is where it kind of comes into like where the beginning of the video where we talked about, hey, this could be turning the corner potentially, not just because the market cap and cash on hand. Most people don't actually pay attention to that, to be quite honest, and actually most people don't. They just think of like, oh, this was a company that got a huge run up in 2020 and now on a downfall and probably has to pay a little bit of a jail time for some time to see how that plays out. At the same time, why did it fall at 12%, almost 13% in March? Basically, this is basically saying that it got caught up in the pullback of the high growth tech stocks of this month, but it looks like the momentum is picking back up the business. Of course, really want to see that revenue growth continue to kind of come back, and really using the cash in hand, which the CEO has said multiple times that they're going to be investing in M&A. So that kind of goes into the next thing. So if you're not familiar with M&A, that's mergers and acquisitions. So they just hired I don't know how to pronounce this gentleman's name or lady's name here, officer for the head of strategy of M&A, 30 years of experience, fantastic, wonderful. Basically, they want to start acquiring companies and grow via that. and of course getting into more fields and things like that. Now going to ARK. So this is one of the larger funds that has a pretty substantial position in this. This is going to be ARK W. They really haven't added. They haven't really bought much since December at pretty much the high. As you can see here, they bought into December right about here. Right about here, that stock. This is the golden yellow thing is the price of the stock, and it has been continuously going down here at those levels. Same with the ARK Israeli national fund, not national fund, but they're more focused on Israeli-based companies. At the same time, they haven't done too much purchasing as well. The only one that has actually bought some was in April 12th, so just about a day ago. They bought it's like 463,000 shares. Didn't move the overall weight of the fund up substantially, but you can see here they were selling February 8th, 9th, 3rd, and 1st. So you can kind of see on how that kind of took a toll at those prices in these small ranges, but it wasn't anything substantial like we're seeing previously. But again, this is a little bit smaller overall position in their portfolio. It's only 1.6, and the other ones are less than 1%, I believe, 90.97, 0.57. So NRQ is actually the larger part of NNDM stock here, and really seeing this potentially kind of running up higher. And of course, with that purchase just recently, potentially, like we talked about, buying the dip, this could be maybe the turnaround story for that. So without further ado, let's go ahead and jump into the chart via Thinkorswim, and we have NNDM pulled up here, highlighting very key zones, kind of doing a little brief history in NNDM. Of course, this was a penny stock, less than $1, just less than a year ago, actually. Had a lot of momentum, got highlighted multiple times thanks to Kathy and a lot of other, mostly Kathy and ARK funds, when they were getting in, and it's continued to see a grind up here, hitting that high, a double top here of basically 1785, 1789 here. We saw that basically be that double top here, and then ever since then, due to the NASDAQ pullback and due to the high growth names that we saw and became to love in 2020, really got pulled back quite substantially here, and really got took into the woodshed here and really got slaughtered here, coming down fairly aggressively here into February and the beginning of March, and coming down to a low around $6.48, getting a little of a dead cat bounce, running into that 618 level, which we talked about multiple times on the live stream. So around 1125, it failed, was not able to substantially get above that, and at the same time we have the 34 EMA that was not able as well to kind of break through that, and has been continuously downward trending here. As of right now, we are still downward trending here. You see here, this is the 8 EMA, which is the purple line here. We have not been able to get back above that. So still in the short term, the trend is still continuously pointing down, because you can see at both angles here that we're seeing this continuous downward trend here. Let me help highlight this. This is a continuous or downward trend. The 34 EMA is also continued to point down. That looks inappropriate. Let me get rid of that. Sorry. Basically, it's continuously downtrend. Could this be a short-term double bottom? Sure, why not? I don't have a crystal ball, but it could be. So we could look at this level here, the 38.2 Fibonacci retracement from the swing high to low. We are looking for, again, that 1715 to be your short-term support. So if you are a risky individual and you want to potentially benefit from a reversal in the stock here for whatever reasons, you could take the bet here on potentially looking at putting in an order here at 750, 755, whatever, and potentially getting a stop loss order here at $7.15 or slightly below it, depending on what your risk profile is there. At the same note, we can just draw some very, very, I hate doing this, but I have to highlight it sometimes, very basic trend lines, just to kind of highlight some very interesting facts here. We've kind of broken past that level here in that kind of aggressive downward move, but with this, with this move here, we are seeing slightly trying to break out here as well. So from that Fibonacci retracement here to that 618, which is around $11.25, we've seen it fail. and now come back down. Potentially, if we get a catalyst, some kind of a movement in the stock here, could this rebound back up to at least 920 to 1125? Sure, why not? So if I would take this trade, I would be looking at potentially getting out at 715, or we start getting closing below this level here. And potentially in the short term, you really want to be trying to getting out above 850 to maybe test $9.20 here. That would be your first very significant level to the upside. Even seeing a very short-term profit around a break above $8.25 to $8.50 to see if we can get that catalyst going higher. Because this stock, again, has been pretty much beaten down. Again, looking at this particular different chart here, guess where that level has come in here? That is the 200 EMA here on the daily chart here. And seeing that bounce pattern here. Scrolling to the weekly chart, that is also coming in. How is that possible hitting the 89? Oh, I changed the color on here. Why is that? Am I on the right charts? Okay, sorry. The 89 EMA on the weekly side. That being said, look at some of these aggressive patterns that we're seeing. We're just seeing the 5 and 8 cross through the 21 EMA on the weekly side. So in the weekly side, it is still very aggressively downward turning. We could potentially build a short-term base around 750 to 750 to 717 or 715 to be precise. But if that could not hold, we can easily test below 7 and even break to the all-time lows of trying to hit 650 potentially. So this is not going to be the one for faint of heart. This is definitely a one that has a lot of emotions behind it, with a lot of people who made a lot of money previously and now has come back here a little bit. And again, potentially getting some bag holders trying to sell off if it breaks up to that 11 to 1125 in the near term, to potentially see a recovery of their past losses, and potentially seeing some selling off there if we do get that movement higher. But that being said, very risky play. I want to be very mindful about that. So I have to put the speculative trade idea warning up there. So again, not a financial advisor, not a financial planner, not a analyst on that side. This is just a fun thing that I like to do and bring entertainment and have folks better understand the market as well. So again, the trade, potentially looking for that $7.15 to $7.20 hold. If it doesn't hold that 200 EMA, we could potentially see some further downside, but I would be out of the trade by that point. I'm not giving this too much room to run, and potentially looking for some first targets around 815, and then potentially the 868 to $9 in the short term. Longer term, you're really going to have to be a little bit more patient, because this thing has been very much beaten down, but we'll have to see on how this one plays out in the near term. And again, guys, thank you from the bottom of my heart. If you haven't already, hit the like and subscribe on the way out the door, and check out those affiliate links down below if you want to help support the channel by opening up an account with Tastyworks, or reading or listening to fantastic audiobooks via Audible, the Amazon company. All right, ladies and gentlemen, I'll catch you guys on the flip side. Peace.